2 damn phones. Babylons can't crack the code.
Alright, so making a quick video on technical analysis. This may be kind of rusty. I'm just going to try and run through it and make it within 5 minutes. So it's kind of like just a quick crash course on what I do when I get up in the morning, things that I look at before I even take my first trade. And so if we look on here at the SPY, this is the 4-hour 180-day chart. And so you can see where I drew lines at. And they're basically support and resistance, you know. For example, this one right here, where you see my cursor's at. Now I've zoomed all the way out. This is going back 180 days, and I can see here that it hit this point, wasn't able to break it, and did it again back here. So this is resistance. It's a key point that a lot of traders are going to be watching. So right here, and then we look further down. It got close to touching it right here, but it wasn't able to. But it did touch it here, wasn't able to break above it, and then we'll kind of zoom in a little bit. And so we can see over here in the past week or so, the same scenario. Eventually it was able to break above it. So this is, I know, like for today, that this line that's gone all the way across, all the way back 180 days, we just got done looking at how far it is back here, that it's hit it 1, 2, 3, 4, 5. The 6th time it's finally able to break above it. So that's going to be a very important key price point that I know a lot of traders are going to be looking at. And so I have that marked. Now, since I have it marked on my 4-hour 180 day, all these lines, when I go to 1 minute, 5 minute chart, whatever's in this area of the price is going to show these lines. So for example, this line is at 281.64. So we'll go to the 5 minute, and 281, well, 64, 66. So it's the same line. So I know a lot of people are watching that. And if we zoom out, this is just one that I drew at the start, and it's just on a small time frame. So we know that this one is real important. It's a key point, really key point. This one not so much, because it's just today that I have it marked. And sometimes I'll try and go back and see if there's anything that lines up, which it kind of does somewhat, if I was to draw this line all the way across. But really mainly we can see that it started to find support here, and we'll zoom back in and see that. And this is the 5 minute, I think it's 5-day chart, goes back 5 days. But so we know this is at market open right here today. So we see it drop, and a lot of traders are waiting to see if it breaks through, and it broke through. And so we see the volume, and this is another thing that I look at is volume. Volume is a key role. So I see this long candle, and I see it has good volume. Then that lets me know a majority of this candle was created from a majority of people selling. I could have high volume. Let me see if I can find a candle like that has good volume, but it's just a small candle, like this right here. We see this candle right here. It's got a lot of volume, right? But we also see that it has a long wick with a short wick. So this lets me know that this was a mixture. There's just a little bit more people that were selling than buying, but it tried to come up and it was rejected and it closed. And so this is, as you can see, this is a pretty good indicator that it's likely to continue down. Now, all this is kind of like driving a car. It takes time. It's taken me, a few years to get to the point to where it's just like second nature looking at it. I don't have to sit here and be like, okay, this or that. I can just look at it and tell. But so I see here on the 5 minute, so I see it broke through this key price point, right? And then we see it hits down this level. And if you're wondering what this yellow line is, this is VWAP, volume weighted price average. And it gives me, if you see up here, the indicator, VWAP, and it gives me 3, the lower band, the middle band, and then the top band. And so a lot of people also trade a strategy called VWAP, like rejection. When it rejects the VWAP, then they'll go to short it. Or if it tries to break through VWAP and it's not able to. I'm not big on that. I look at key price points, and if they're on a long term, like a 4-hour chart like this one, then to me that's more golden. I feel more confident in the trade versus just doing a VWAP or you know, following the EMAs. Now I keep an eye on that though, but so I see the volume and market open, which market open always has a lot of volume, and so we can go down on the 1 minute and scroll back. This is the 1 minute, and so like I was saying, those lines will show up that I drew on the 4-hour chart. It's just basically I'm zooming in on a shorter time frame, and so this is the key price. So we see here at open, a lot of volume, which was expected. We sell off and we hit this, and you can see right here, you can see that it had trouble breaking it, and so some people sold, some people bought, but it had trouble breaking it, and eventually the bears won on this next candle and it came down. Now you can see it came down to this point. So what I'm doing is I see this point, so I'm watching this, and I'll sit here and, you know, as the market's going, and I'll look and I'll go on this candle, and if I'm on this candle, then it shows me up here the high, the open of the candle, the high of the candle, the low of the candle, and the close of the candle. And so I'll you know, look at this candle and see how the low of it was 281.32. So I'll be keeping an eye on that until, because this is, you know, the first time that it stopped, and so I'm looking to see, this is going to be what they call, I guess, like the bottom. So far it's the lowest low it's made so far for the day, which it's still early in the market, but so I'll be watching that. And then we see it come back up, and like I said, this is a key price point, and it keeps hitting it, trying to break it. It can't break it, it can't break it, and then it starts to break it, right? And as it continues to have trouble breaking it, and it comes down here and it tries one more time, and once you see it, it tries, oops, sorry, but once you see it tries one more time, then the bears plus the bulls are like, oh crap, it's not gonna break it, it's just not looking good, go ahead and sell. So they sell, and then the bears jump in, and that's why you see this long red candle, and that lets me know that this was a really strong move, really strong move. Now you see it tried to break below this price point, and see, we know that this is a low, and it ended up making a new low, but it wasn't able to hold it, and it came back up. And so then this next candle, we see it hits this area, and then this is when the bulls come back in and they start buying it up. And then, so, you know, when I'm looking at, and you can't ever, they say you can't ever get the top of the candle, you're never gonna get the very tip top of the candle, and you're never gonna get the very bottom of the candle, the very bottom of the dip. But this is what we call a channel, because it's like a channel of a river. You know, if we had water going through here, it's staying, it can't really get above this line, and it can't really get below this line, and so it's staying in this channel, just kind of ricocheting back and forth, as we can see. And so, you know, if I was looking to go long, I would look to get in at this point, and then I would say, okay, I'm gonna try and get in, you know, right around this 2830 area, and then you know, if it goes against me, then for me, once it breaks this candle right here, which the low is 281.21, so it breaks it, and I may hold on a minute if it was to break it and go lower, and then after that, on the next candle, if it was still red, then I'm like, okay, I gotta get out. Obviously it's broken through it, and the probability is it's gonna trend down. It could reverse, but who knows. And so, you know, that's the thing, is once you get in the trade, as soon as you get in it, you gotta be ready to bell, and you need to know before you even buy, you know, if you're going long on this trade, before you even buy, you need to know, am I gonna, at what point am I gonna get out? Like, how much am I gonna risk losing, and however much it is will help me determine my size on when I'm gonna go in on the trade. And so, you know, for me, if I had confidence that, you know, even so, if it hits this VWAP, I think it's gonna come back up, and I'm willing to risk it, then, you know, and I'm not too confident, then I may only go with, like, you know, 1 or 2 contracts or something like that. But if I'm pretty, like, you know, it's obvious to me, like, this is going up, then, you know, I may go with, you know, 4 contracts or something, you know, start off with 3, and maybe add one as I get confirmation. But the deal is that a lot of new traders, they'd be so quick to buy in, not knowing why they're buying and where they're buying at and why. And you know, for me, and this is just my opinion, you don't want to be buying in just like in the middle of this channel, you know, just randomly buying in. You know, once it's become evident, you know, where there's, you know, support and resistance are, and these are the points that you want to buy in and be prepared to jump out as quick as you got in need be. You know, as you see here, you know, so it came up, and you know, when I look at, you know, trade on a short time frame, then I'll look and I'll see, you know, it's kind of following the 9 EMA. And as you can see here, I have a 9 exponential moving average, a 20, and 180 day. And I know some people use a 50, I don't so much. And we got the RSI down here. Now this just lets me tell, you know, this, some people really base their trades on this. I just look at it as a general tool as far as, okay, how close are we to being overbought? And as you can see, it gets highlighted down here. It lets me know that we're oversold. Sorry, that we're oversold. But I just use it to tell if we're oversold or overbought. And then if it's up here, you know, it'll be red, and it'll let me know that we're getting overbought. Now, just because it's overbought or oversold doesn't necessarily mean, you know, if it's oversold, then doesn't mean buy it up. Because there's, I mean, it just gives you a general idea of, okay, this is a possibility, but I'm not going to base my whole decision on just this one indicator. You know, I'm going to look at the volume, and also I'll go ahead and pull up level 2 as I'm going through these trades. And so like when I'm at this point, and this is, you know, me trading on a short time frame, I'll try and, you know, let me see if I can detach this. Can I detach it? I think I can detach this one. Give me 1 second. You'll see what I'm talking about in a minute. I'm on multiple screens, so I'm going to drag it over. Okay, so we'll do it like this. So this is a crapshoot, but so this is what level 2 is, and so I have this on my other monitor to my left. I have 3 monitors across and 1 below, so I got 4 monitors going. I'll have this one with all the different level 2 on my left monitor. Then on my middle monitor, I'll have a chart here, and on my right monitor, I'll have another chart, and I'll flip back and forth between the SPY and VIX. And on this one, I'll have the ES, which is E-mini S&P futures. And then on the bottom monitor, I will have where I put in my orders for whatever broker I'm using, and actually, you know, doing the live trade on that. And so basically I'm using Thinkorswim just for their level 2. And so this is the E-mini, which is trading right now. And so this, we can see this is the ask and the bid. They got 24 contracts. Someone told me once to put 2 zeros behind it, but to me it really doesn't matter. I think this is legit. They got 28 that they're trying to sell at this price, and they got 59 at this price. And so I'm looking at green, and it being green up here lets me know that the people on the bid are saying, you know what, I think it's going to go up. I don't want to, you know, it's worth going ahead and just paying the 29, you know, the 28.29 instead of waiting for them to see if they'll sell to me at this price. And so that's what the green is it lets me know that people have that desire, that they're willing to pay whatever the people are asking for, that, you know, are wanting to sell it. And so it gives me, and so I don't look, and someone asked me the other day, well, you know, what sizes do you look for? I don't look so much for a certain size unless I see like something huge stand out, like, you know, 100,000 or something like that, you know, like, you know, just obviously stick out. Then I'll look to see what color was it red or was it green? Aside from that, I'm just trying to see, and this will be going quick, especially at market open. You know, it's late at night, so it's not really moving. The volumes are low on the E-mini futures right now. And so anyhow, I'll watch that and it'll let me know. See how it just turned red? So it lets me know that people were just like, screw it, I'm gonna go ahead and dump it. You know, I want out of this trade. I want, you know, that, or you know, they're selling to whatever people are willing to offer them for it, you know, the bid. And so it lets me know. And now I don't base my whole trade on just this either. And that's where it gets kind of confusing. And I was telling someone the other day, it's kind of like driving a car, and it's taken me about 3 years to get to the point where I am now, to where I can look, understand what's going on, get a good feel for the market, and I still get it wrong, you know, from time to time, but I'm more on cue more often than not. And so anyhow, so we can see here that there's a lot of red, and so I'll just be keeping an eye on that. And so when it gets to, so we'll go back to this. I know I'm kind of jumping around, but so we'll get back to this. So when it gets to this point, right, and it's looking, and it's like, you know, then I'm watching this over here to see when it's around this price level, what's going through. Am I seeing more red, or am I seeing more green? What are the sizes down here? Now this is where I'll look at the size on the ask and the bid, but even this, people manipulate it, and they'll put up, some people put up like a big order, and so like trying to push it up, but as soon as you start seeing these people sell into it, then you see that order go away. And it wasn't that the whole order got filled, they were just trying to manipulate it and drive it up. And then vice versa, someone will try and keep the price down, so they'll put a big order to sell a lot, you know, and basically, you know, I guess a technical term, whatever, be like they're trying to put up a wall, they're trying to stop it from breaking above this point. So anyhow, so I'll be watching this as well as volume. How strong is you know, this going, you know, how much is getting bought up or sold, is it red or is it green? And then it lets me know. Now we see here on this one, it hit the VWAP, and this is what's gonna let me know. So right now it's below this middle VWAP, so it's still considered, if I'm going by the VWAP indicator, it's still let me know that we're on the downside, we're still on the bear side. Now if it breaks above VWAP, then we know that it's being more bullish, and that you know, if it can hold above it, then we're likely to start maybe trending up. So we see here, and that's basically where you see it knocked down. So it was able to break above this historical price point from the past 180 days that it's been hit 6 times and rejected, that it's able to break above it, but then it runs into VWAP and it can't get enough volume to break above it, enough buying. And so this is where the shorts jump in, and they like to short it, and then it comes down, and you know, nothing just goes straight down or straight up. It goes in waves, and so you can see it comes down, some people go ahead and take profit and get out, and then others jump in, and then this is where we see a strong downside. And so this is where people short, and I don't recommend it. It's a lot riskier in my opinion, but they look to see if it's going to break above this, then they'll jump in, you know, right after it breaks below this price point, this 21, we're just gonna say 2130, roughly, and then they'll jump in. And you know, for me, if I was to jump in at 2130, I would look to possibly get out at 21, sorry, so if I brought 281.30, if it broke below that, which I wouldn't personally take that trade, it's too high a risk, because you know, if I get in on this trade at 281.30, then the deal is once it breaks it, the prices can probably be like 281.35, sorry, 281.25 or 20, which means we know that half numbers and whole dollars and half dollars are psychological price points. And so I know that the likelihood is if it does, I get in at 281.20, that's gonna give me 20 cents to the downside before it hits 281, and 281 is gonna be another key point if it can break it or not. And so for me, no, I wouldn't take it. I'd be more inclined to jump in and go short here, when I see that it rejects that and it starts breaking below this candle, that's when I would look to get in. You know, maybe get in with 2 contracts, and then as it comes down here, still hold them. And this is where a lot of traders have a tough time, as it starts to go against them, and they just automatically, I'm gonna go ahead and take profit, jump out, and then they miss out on the rest of the move. This is where I would look maybe to add another contract once I see it rejects this and comes back down, and we go into this candle and it starts red. Then you know, that's when you may want to add, or if you may just want to stay with what you have and go ahead, and once we get down here, sell 1 contract, and then, you know, we get down here, you still got, you're holding on to other, and you may go ahead and get out or still hold it. And then once you see it start to go up against you to a certain point, then it might be one of your rules that you know, I'm only, once I'm up X amount, if it goes against me X amount, you know, towards my profit, then I'll just go ahead and get out. And so you look to get out, and then we see it coming back up, and it tries again and it breaks above it. I guess this is what they call like a false breakout. It breaks above the 281.65 areas, and then is able to get above VWAP, but isn't able to hold it. And so the fact that it's not able to hold it is when you start to see these, that's why I see these red candles back to back to back, is because it didn't have enough to buying to come in. But we see how low the volume is, so this is kind of a tough read. The candle looks pretty good, strong, but the volume's not so big as it was over here, and so it gets kind of tough. And it's like driving a car. You don't just focus on the gas, you don't just focus on braking, you don't just focus on steering, you don't just focus on turning the radio on and listening to music. It all comes together. You don't, you know, focus on just stopping, and it all comes naturally, and it takes time. It takes, you know, just, you know, for me, luckily I don't go to work until afternoon, so I spent, you know, whatever days the market were open, unless I had a doctor's appointment or dentist appointment or something, I was here at market open, sometimes before market open, until, you know, 11, 12 o'clock, until I had to get ready for work. And so basically I just crammed and studied as much as I could, as fast, you know, trying to learn. And then at work, luckily on my job, I'm able to watch videos on YouTube and watch other vloggers and their trades and things that, you know, problems they run into. And so that's just kind of a quick deal. So we got the level 2. This is what level 2 is, and go ahead and pull that and close it. And so I got that going on. Then, you know, I'll have and you can't pull this up on Robinhood. You can only pull it up on like Yahoo Finance, or maybe TraderView or something like that. But this is basically, you know, the Cboe market volatility index. And so what this is letting me know is, you know, as it goes up in volatility, that I can expect more moves, because it's going to be more volatile. This is what I was talking about on the RSI, that lets you know that it's being overbought. And so you see how it's red, but just because it's red, I've seen it before, man. And so it may be red on the 1 minute, but if somebody else is trading on the 5 minute, let me see. So let me wrap this up. So this is at like market open. We can see that's red. Let's see if it's still red on the 5 minute. It may be, it might not. Yeah, it still is, not as much. But it just depends on what time frame. I've seen some to where it's barely, like here it's barely in the red, and then you go on the 1 minute and it might be like huge. You see, it's big time in the red here, but then you go on the 5 minute and it's just barely. And so basically, when you can learn what traders are looking at, and I sent my friend, one of my trading buddies, a picture. Go ahead and pull this back out. I didn't mean to close it. Pull up the SPY. So I sent my friend one trading pictures about this channel, right? And if you look, and you know, if he looks at the picture, you can see like it's black here, because when I took the picture, this hadn't happened yet. You know, it was at this time that I'd taken the picture, and so none of this had happened. And so that's the deal. Is you see a lot of people, and they'll try to do a tutorial and say, you know, this is you know, where am I? Oh, I'm way off. Sorry. Going back. Here we are. So, what you know, if I show. So I took the picture and sorry, none of this had happened yet. And so, uh, what I'm trying to display to you is you see a lot of people on YouTube and stuff, and they'll say, "Yeah, so this is what you do here, and then you could have did this, you could have did that." And hindsight's always 2020. The deal is learning what to look at and have enough confidence to take the trade, and knowing like if it goes against me, if you got in here to go long, and bam, it comes down here, you say, "All right, I'm out." And yeah, it did turn back around, but you don't know that for sure. If it's going to turn back around, you see here, it broke it and it came back out and gave you a chance to get back out. Hopefully it break even, but then it just continued to sell off. And so that's where it gets tricky being new, is you can't just, and I've done it, and I still am horrible at not cutting my losses fast enough. Luckily I had 2 trades last week that went against me. I was being dumb trying to trade at work off my phone, and I finally made that a new rule: no trading off my phone. If I don't have these kind of charts in front of me in level 2, then other than maybe buying an option on Robinhood right before market close, something like that, then no, I'm not gonna try to trade off my phone. For me, that's just, it's a bad idea. I did that last week at work, lost 80 bucks. Luckily I got home later on that night, traded futures on the E-mini S&P futures, and was able to make back most of that loss. I lost about 80 bucks, 40 in 2 trades, and then when I got home I was able to make like 67, and then the next day I made the rest of it back and then some. But the deal is, if I wasn't being stupid like that, then I would be up $80 more than what I am now. So getting back on point, hindsight's always 2020, but when you can learn what a majority of the traders are looking at and focusing on, like we know that this was a major price point. You can see down here it continued to hit it and could not break over it, and then it finally does, but it's not able to hold above it very much. And we see here the 180-day EMA, that's a big one too that people are watching. But overall, this price point, and it just comes with time. You're like, well, Brian, you're saying that if it breaks above this price point, then we're good. But now you're saying that this 180-day EMA is another, and it's just because this price point is off the 4 hours, and it goes back a long time, and it shows that it's hit it many times, and so it's pretty valid. Now 180 is also pretty valid, and you can see here is able to get above it, then it continues to struggle, and it comes down, it tries again one more time to break above the 180 days, not able to, and then we see the sell-off. And so this is, and it comes with time, and really, there's no replacement for screen time. Like, you can't buy it, you just have to spend the time and be here, day in and day out, and watch stocks, and sometimes just sit here and watch. There's a trade earlier in the morning I was telling my friend about that. If I can find it, I think that this was it. I think it was this that I was looking at getting in, and then it came and bounced, and then it ended up selling off, and I totally missed it. But it's hard when there's low volume too to really read an accurate, and so I'm not big on trading with low volume. But if I have a good idea, if I look on the longer term chart and believe like it's going to sell off, then I'll look for a good entry. And if I can get in a good entry, and that's what happened this morning. I'd gotten in back here at this area. Once I saw it couldn't break above this, that I just hit it and came back down. That and I'm trying to look back here and see if I can find something to kind of better validate it. But it was a risk I was willing to take. I had small size, and as you can see here, and then I opened. I ended up selling off. Freaking using Nadex. Crappy, dude. Whenever you get volume like this, its platform cannot keep up. and so I ended up getting a horrible fill. I should have made $40+ whenever I sold, and it filled me because I didn't mark it to hurry up and get out because I had to be ready. I didn't have time to type in the price just in case this thing spiked up against me. And so I did a market order, and when I hit market order, it was like, I want to say it was around 52, something like that. And somehow it managed to fill me where only after commissions only made $16 on the trade. Yeah. And then, you know, we see here it continued to sell off, and it's like, well, hindsight's 2020. And market open, man, in the split of a second it can flip up against you and you can be down hundreds of bucks. I'm not a big fan of holding into market open. I prefer to if I can get a decent trade before market open and make, you know, a good 20, 40 bucks, 50 bucks, then I may call it a day and go back to bed, you know, hit my goal for the day and go back to bed. And so it's just about being disciplined. And so anyhow, we've gone all over this. This video has gone way longer than expected. I hope it has been of some help, but these are things I'll look at. You know, you can also look at the daily. I'm going really quick if you need to rewind this, but sometimes I'll look at the daily and see what I can find. I know I have a lot of lines, and from time to time I'll go ahead and erase them all and then start over and just keep the main ones that are obvious. But you know, you look at the daily right here, you can see this and see on daily, you can see like it's been a major price point, you know, even back here in this range. That, and so anyhow, I could go on and on and on. It'd be a long ass video, but you can look at the daily. The 4 hour I like, though, it kind of gives me a better kind of in between and accurate, I think more of an accurate picture of what's going on. And then also during the trade, and I'm gonna wrap it up after this, I gotta eat dinner and start shutting things down here. Also, you know, being in the trade, also try to determine, you can see here that it's this 9 EMA. You can see how it's kind of trending along it, and then it gets too far away from it and it pulls back to it. And so that's another thing that I watch, and then it's able to break above the 9 EMA. And so I know it's really respecting this 9 EMA, you know, and has. Sometimes you'll see a stock and it'll really go stick to the 20-day EMA, you know, on the 1 minute or the 5 minute. But we can see here that it really kind of favors the 9. And so that's something that I'm keeping in the back of my head too. And so, like I said, like driving a car, these are just all the things that kind of come together that I'm looking at, and it gives me a feel for the market. Sometimes, like, you know, and partly why I didn't take that trade this morning, I was talking about in this area, was because I just got up. Actually, that wasn't it. It was right here. Because I got up at 6:30. It was right here, and I got to the computer right around 7. And the reason why I didn't take it is because I just woke up, and I need to try and get a feel for things. Even though it's low volume, I can kind of see how it's trading on level 2, and so I didn't take it. I was that close to jumping in, and I didn't, and you know, shorten it, and you know, I just sat here and watched it go, and you know, could have made some decent money on it, but you know, just jumping in, you know, because I just woke up, I hadn't really had a chance to get a feel for the market and how things were trading, you know, and kind of looking to see what happened earlier in pre-market. Then I'm taking on risk that is not necessary. I got to protect my capital, and that's, you know, the most important thing is watching risk. Is it worth the risk? Now, if you take a trade and you lose money on it, it goes against you. As long as it was worth the risk, then yeah, it still stinks, but you shouldn't feel so bad about it. If it wasn't worth the risk, then yeah, you should definitely be a little upset with yourself because it wasn't a well-planned, disciplined trade. But with that said, I'm going to go ahead and wrap it up. I hope this helps, and I will talk to y'all soon. I'll try and do another video. I'm looking at moving pretty soon, and so once I move, I'll have my own room to kind of work out of and try and find time to do this.